Hey folks, Bob Desmond here over at the Contrarian Trader, and welcome to Contrarian Chat. This is where we're going to talk about several charts that I find very, very interesting. I'm going to follow up on Facebook and Google. I spoke about them earlier this morning. It's posted on YouTube and the website, and the symbols I'm going to refer to are Facebook and Google. Horrible performance today, but the charts told us that there was a problem on the horizon for both of these names. Amazon as well, but we're going to talk about Facebook and Google, and you can extrapolate for the most part the problems with Facebook and Google into Amazon. So before we get to the charts, I'm going to ask you, please, my goal is I need 1,000 subscribers by December the 31st. So if I could ask you, please subscribe to my channel, share the video, leave a comment, and hit that bell right below, and you get a push notification every time I do a video, and it's posted on YouTube. For you folks watching this on Stock, Twitch, Twitter, follow me there, leave a comment, and if you're watching this on the blog, enter your email address. We'll get you out some free tutorials, and you will not be spammed. You have my word there, no spam pledge. All right, let's get to it. A crazy day today in the markets, no doubt about it. Even pros get a little bit nuts. So let's boil it down to what's going on here. What I believe is going on is that you're seeing a bit of sector rotation. You saw the banks strong, the transport strong, while only a week or so ago, they were very weak. What's going on? I think that as the tax reform bill makes its way through Congress, you're going to see more sectors stand out as beneficiaries of the new reform. So in terms of the transport, you can extrapolate out from the price action in the market that the markets believe that the tax package is pro-growth. They also believe that there will be higher rates, and more probably than not, you're going to see higher rates. That's why the banks rallied, and there's probably provisions in the tax bill that help the banks. I mean, simply bring up the XLF, and you could see that we rallied today 1.71% on the day on a closing basis. On an intraday basis, we were up over 2%, but we closed off the highs of the day. We're a bit overbought here relative to the 3 standard deviation Bollinger Band. This is not a 2 standard deviation Bollinger Band, so be careful. Don't go chasing the banks quite yet. Might this rally be for real? It looks that way, but you need to wait for a pullback, right? So members will be talking more about strategy as we move forward, and we'll begin doing that tomorrow morning on Market Wrap. I want to see how the markets appear poised to open tomorrow morning before we draw any conclusions. So the banks were strong. You had your transport strong. I've spoken about Kansas City Southern, which is a rail stock. I spoke about it over the weekend. I spoke about it again this morning. And today, we broke out. This is a weekly chart, broke out on a weekly basis. So do you go chasing it? No, I wouldn't. Not quite yet. We'll probably get a retest, but this is a significant breakout. So we're going to be talking more about how we plan on building positions, because what has worked isn't working right now. So give a listen to what I spoke about this morning about Facebook and Google. Check it out.
The next chart.
Okay, so
Facebook,
that was this morning. So the market sent us a signal,
as expected. But when you take
one
a
could
look
argue
at the
that they
daily
even
chart,
did it on
we had a bearish key reversal yesterday. Now, if you take a look at
here,
some
with a little bit of a
major
topping
indexes,
on top
such as the
of this candlestick, it's a sign of sellers moving in. Yesterday's bearish key reversal was not good.
Bearish key reversal,
as I mentioned earlier,
higher yesterday.
This morning,
so
before the market opened, this was a concern, no doubt about it, and the probability was to the downside. Now, would I go shorting Facebook right now?
The probability
no,
of us after
we have
a bearish key
pullback,
reversal,
right? Down 4% on the day, a big move, no doubt about it.
Is fairly good.
Real
if you break out
test
above
is going to be how we
prior
close on
resistance
Friday
level,
afternoon.
well, then that's a very strong validation.
This is what I'm
the
looking
shares
at on this
want to
weekly
proceed
chart.
higher. So
I
on a
want to
new
see whether or
breakout,
not
Facebook's
blow this
buy.
up.
But the probability is that
I want to see whether or not Facebook is able to close above this, what should be support. I mean, it did break out several weeks ago.
I'm just saying that we should get a pullback And
this
that
should
could be
now
the pause that
act as
refreshes.
support after it acted as resistance. If it fails, folks, look out below. If we close down below this lower band of support and we make a new weekly low next week, Facebook, I would entertain as being a short. And I don't say that lightly, okay? It's very, very important to appreciate leadership in the market. Don't just go running willy-nilly shorting, because this is not the market to short traditionally, right? Shorts have gotten burned over the past several years. You want to get in, you want to get out. If you try to make it an investment, you've gotten burned time after time after time. Doesn't make sense, especially with a leadership stock. So let's watch and see how Facebook closes out the week, and then members and I will discuss if we get a poor close on Facebook, how we will proceed. Now, check out what I said this morning about Google. Google was far more ominous because what we had was a breakout point failure yesterday. The market really sent us a signal about Google, and it was no shock whatsoever that it tanked today. Let's go take a look at this morning's update.
Google, another stock that I spoke about on Best Stock Charts last weekend, and we did break out this week. Good stuff, right? The problem is, daily chart, much like Facebook, it couldn't rally with the markets yesterday. That's a tell. That's the market sending us a signal. And in fact, when you take a look at Google on a daily basis, we broke out on Monday. Yesterday, we had a bear trap. We broke down and closed below what should have been support. Now, could we gap up today and recapture it? Sure. But if we make a new continuation move lower, new daily low, look out below for Google. Volume to the downside was very high yesterday. So we had institutional distribution. Caution flag is on the track for Google.
Okay, now let's take a look at Google and how it closed out the day. We'll come back to the weekly chart because it's critical to watch that weekly chart, right? Because that's your macro view. That's your 30,000-foot view of the battlefield, of the market. Your daily charts are far too volatile. That's why I like to analyze charts after the market closes. And I certainly don't like to use intraday charts. I am not a day trader. I'll leave that for day traders who are very, very good. Most go bankrupt. It's not for me. I'm not good. Back to Google. Sorry, I digress. So Google, here's how it looked prior to the open when I was talking about it this morning. And it gapped down. And the problem here is a couple of fold. One is that we closed down below the lower band of the rising uptrend channel on a daily basis. In and of itself, not horrific, okay? It could bounce back. More than likely, I would expect not just a drop here. What I'm going to expect is a rally back and an attempt to try to recapture prior support. But that prior support is going to now act as resistance. That will be a tell. Can Google recapture this prior lower band of support? I don't need to do anything until I see it A, fail, or B, succeed. If it succeeds and begins to break out, I'll buy it. If it rallies, fails to recapture this lower band of support, prior lower band, well then it becomes a short as it begins to break down once again. Until then, I'm a bystander. And we'll be discussing this with members, especially over the weekend, because there's a sea change going on right now. What wasn't working is now working. Healthcare, working. Telecom today did great all year long, horrible. And in fact, for fellow member John, I'm going to be going over, he's a gold member, I'm going to be going over a chart he requested I go over, which is AT&T. So I'll get to that last chart of the evening. So let's go to the weekly chart. Now, this is where you should really worry about Google. All right, so it is Wednesday evening. The market's closed. We have 2 trading days left to go. That's an eternity in the market in my book. So we're using weekly charts to identify good opportunities from that higher level view, not day trading. And you could see that we had broken out, as I mentioned on this morning's commentary. I'll link to that at the end of this video. So when the video ends, it'll show you the link. You just click on it. You can watch this morning's commentary. So we broke out this week. Now we have reversed to close lower. Bad stuff. Now, if we close out the week below this lower band of support, that's simply horrific. Right now, we're not there. As bad as today was, we're still holding support. Now, if we close where we closed today at the end of the week, that's a bearish key reversal in and of itself. Not a reason to go shorting a very strong stock. All right, this is a stock that still has the path of least resistance to the upside, right? It's not in a downtrend. So you don't want to go jumping in willy-nilly shorting this stock. You want to make sure that the path of least resistance is about to change. You can anticipate that change with a small position, and then on the validation of the breakdown, then go adding aggressively, meaning lean into the short. So we're not there yet. Far too early. So we'll talk more about this with members in terms of strategy. Now, weekly chart, you would think that we should be making a new high on RSI. Guess what? Double top. Not good. And a double top on Stokes. But this is a weekly chart. 2 trading days left to go. Now, I also mentioned this morning, Google, it had failed yesterday to close above this support level, which it broke through on Monday. That is a bear trap, or as I like to call it, a breakout point failure. Bad stuff. So we know from vast amounts of experience that the probability of us retesting the lower band of support is literally like 99%. The probability of us continuing lower beyond prior support is very high, but nowhere near 99% on a strong stock like Google favoring shorts. That's how serious I am about this. This is horrible price action. So we'll see how we close out the week, okay? Friday, the end of business, we'll know pretty much how we're going to set up our trades for the next week. So join the Contrarian Trader and become a member. Now let's talk about a trade that I put on yesterday. If you're not currently long of it, far too much risk and not enough reward. We bought it down here. I didn't need to sit at my desk. All I did is I put in an advanced order on my computer. It got triggered. How did I know where to buy the stock when it was in a free fall like this? I knew because I wasn't using daily charts. What I was using was a monthly chart. We knew in advance where to put our order. And I had expected that we would go all the way down to $16.61. But I didn't want to deny myself the opportunity if this support level were to hold to not be involved. So we opened up a reasonable position. We set an advanced order. You don't need to sit in front of your computer. Set an advanced order. Know where you want to get into your stocks. Then go to work. And the trade was triggered. We got long. And today, we're actually up on this trade as of yesterday. But today we rallied about 3%, nearly 3% on the day. We're up about 3% overall on the trade in 2 trading days. We're still long. We'll probably sit with this trade a bit longer. Look for a short squeeze. There aren't many shorts in this name. And we'll look to get out. And this is what I like to do, extreme trades. Another one that we're trading right now, I booked profits in it, but we re-entered it, and it is Nektar Therapeutics. Now, we booked profits on our short on Monday. Then yesterday, we reopened the trade as it appeared to want to go down lower again because it made a new daily low. But the support level held. So I have a price target in mind where we'll be looking to short aggressively. It is not too far above where we closed today. If we make it up to that level, I will look to lean into the short. Now, this is one where we could just put an advanced order in. I've already discussed with members our strategy and where to put their advanced orders so that they can get short of NKTR at a risk to reward level that's favorable. Look at the stock. This is just simply unsustainable. You have RSI 92.68. It's not supposed to be here. When you take a look at a weekly chart, we're leaning into the third standard deviation Bollinger Band. Very extended. So we're expecting a pullback fairly soon on NKTR, but I wouldn't go shorting it right now. It has to hit historical resistance. So patience. Just when you think that these extreme stocks can't go any higher, they do, especially pharmaceutical stocks. So you really need to have a discipline. Members will talk more about this. Let's leave off with John's request, fellow member John, for AT&T. Now, the telecom sector had a horrible year this year relative to the major averages and especially to the internet stocks and the semis. So knowing that the telecom sector has had a horrible 2017, I don't want to go to a daily chart. I don't even want to go to a weekly chart. I want to take a look at the monthly chart. We have 1 day left in the month. So what I want to do is I want to see how AT&T is poised to close out the month. And right now, rock solid. Bullish key reversal on the month. Good stuff. So I like AT&T. Would I buy it where it closed today? Let's go to a daily chart. And my answer is going to be no. And I'll give you my reason. The reason is this, is that we've had a heck of a run. Shorts have been squeezed. We're now leaning into the third standard deviation Bollinger Band. Folks, can it go higher? Absolutely. Would I buy it here? No way. It's against my discipline. So volume is good. Institutional accumulation, good stuff. So I think that the shares, longer term, are going higher. I think that we will get a pullback. That's the pullback that'll provide you a good risk-reward entry point. Not until then. So members will talk more about AT&T and the rest of the telecom sector because it had a good day today. Thanks for joining. Please subscribe to my channel. If you watch this on YouTube, click that bell below, please, and you'll get the notifications when I put out new videos. And please share the video with a friend. Leave a comment below. If you're watching this on Stock, Twitch, or Twitter, follow me there. And if you're watching this on the website, enter your email address. We hate spam too. We'll get you out free trade tutorials. Everybody have a great trading day tomorrow. Be well.